Good morning, afternoon, or evening, traders around the world. Blessings to you all, and may you have a prosperous trading week, trading day ahead of you. We're going to look at the trade signal for the 5th. We did the trade signals for the 3rd and the 4th, and we'll do the trade signals for the 5th now. Now, every day we redraw, every day we redraw, every day we redraw monthly, weekly, daily support, supply demand, support areas. That's every day. So we redraw these every day. Even though they're going to be the same on the chart, we still redraw them every day. It's above, below, weekly. Now, as you do this on a daily basis, then you'll start getting familiar with the supply and demand levels that are holding on your chart. We reviewed these the other day. We reviewed the pattern breakout, and we know based on data that when price moves into these areas of supply and demand, support, resistance, that there's usually a retrace. Usually a retrace. So right now, price is in an area that we drew yesterday, meaning the 4th. Now we're trading the 5th. We just redrew our area again. Now we have to see if price during the Asian session, the trading day, is going to break past this area or move down. Now what we see on the 5th, trading starts 1 o'clock. Now we know that this was a level here also. This is 6-0. The 0-0s and the 5-0s. Always watch out for 0050. Gold loves, institutions love 0050. There's a lot of goodness, a lot of love at the 0050 levels. Remember that. Alrighty. At the 2 o'clock hour, we have a sell signal, an hourly sell signal for the Asian session. A 2-bar sell signal. And then once we do our candle pattern review study, you'll see this hammer indicating a reversal of profit and of price. But we also know that price is in a strong area of resistance for the month. So this would be your first signal. You would place your trade here. Place your trade here. And then you'll place a stop loss. Depending on your money management, you'll place a stop loss right here to right here. First trade for the 5th. For swing traders, you would be holding this trade for a day or so, or you would be holding this trade expecting price to come down to this level to this level. So for swing traders, you would be looking for price to decrease 2,000 to possibly 4,500. And swing traders would follow price to these levels. We are in an uptrend, so we would expect price to retrace and then continue on the uptrend for swing traders. Steep uptrend. So for swing traders would be looking for price to retrace to one of these areas of support now, and then look back to get into the uptrend. So this is January 5th. We have our levels drawn out. We see the 1600 levels holding. This is your trade signal right here on the one. Your stop losses would be right outside of the area from here to here. Those are your stop losses. These were the monthly areas of supply, demand, support, resistance. This is an area of supply where sellers are coming into the market. And then we get a trade signal right here. And then we would draw the areas of support where during the intraday trades, you could expect price to come back down to. So when price comes back down, we would expect price to move up to be supported at these price levels right here on the chart. Again, these are monthly, weekly, daily price levels of support and resistance. So we would expect price to find support in one of these areas during the trading day. So Asian session, London session, New York session, we probably will get another trade signal to go long in one of these areas. This is our trade signal right now for the day. We would hold that and allow the trade to play out. All right, what did price do? Our levels were drawn correctly. Our levels were drawn correctly. Now price during the New York session, this would be your next trade opportunity during the New York session at 1500. That is a retrace, a breakout retrace of this pattern right here. Breakout retrace of this triangle here. And we are in a steep daily uptrend right now. And as you continue to study, you'll start seeing trend lines, trend patterns. We're in a trend channel. We are in a trend channel here. And everything is agreeing. Our supply and demand, support and resistance levels are agreeing. So if you want to enter an intraday trader, you could have entered on this hourly signal right here with your stop losses in this area or this area right here. That's where your stop losses would be. For your trade long, you would enter here, enter in this area here, and then place your stop losses in this area to this area. Again, supply and demand, support and resistance never lies on the chart. How do you know? Well, price entered into a supply and demand area, an institutional supply and demand area, and there are sell orders every month in the market. Every month gold does this, whether it's trending up, whether it's trending down, or whether you have a consolidation trend and the market is moving in a box or moving sideways. Then we draw our lines. These lines were already drawn before the session. we drew these lines. If you go to our weekly analysis videos, these lines were already drawn during our weekly analysis, because at the beginning of the week we give you all of the monthly and weekly supply and demand areas where price is most likely going to reverse. So we see a signal on the three, I'm sorry, a signal on the one to get in short. For intraday traders who want to enter on the 515 515 chart, this is how your entries would look here. 2 o'clock entry, you have a long candle confirmation of intention. You see, that's a distribution. That gives you a lot of intent. You would have had a 1, 2, 3 bar reversal here with these two inside bars. That's a 1, 2, 3 bar reversal, but now this is a 4 to 5 bar reversal. That is intent. This bar right here on the 3 is intent. So you would have entered 2 o'clock here at the 58060 level, 6050. What did price do at 50? 6050. What did price do here at 50? Price at 50 turned around for almost 500 pips. So if you're aware of the 0 zeros during the trading day, that is another trade, and you got a trade signal here. Depending on your trading style, you could have traded the 50 with this trade signal here, here, here for 500 pips up. The larger trend for the day is down. The larger trend for the day is down. So this entry signal would have given you the most profit. So 3-5-15 for intraday traders. This is how it looks on the 5-minute chart. There is 1, 2, 3 bar reversal. This is a 2 bar pin bar here. This is a bullish candle with an inside bar. 2 bar pin bar here. Pin bar here. All indication price is moving down. But again, if you are an intraday trader that is almost scalping, then this would be a good trade for you to go long right here at the 500 with this entry here. And those are very, very tight stop losses for scalpers. So you would enter trade here, and your stop loss would be a very, very, very tight stop loss for scalpers. Your stop loss would be right there. That would be for a short, quick trade. Again, the trading day is suggesting that the daily move is down. We know gold daily moves right now from our daily data. From our daily data, and go look at the daily range data video. But from our daily data, we're getting 3,000 pip moves for gold. So we would expect gold to move at least 2,500 pips. That's 26. That's 3,000 here. And this is 3,500 here. So you can plan your trades. Here's your 2 trade signals for January the 5th. One here during the Asian session, and then you had another trade signal during the New York session long. Now remember, we are in an uptrend, so swing traders would know that this is a breakout of this pattern here, a breakout of this triangle here, with an expected swing moving above here. So swing traders are entering here at the 1500 hourly signal. You have an hourly signal right here, And swing traders would probably hold this trade for the next couple of days, expecting a rise in price to continue with the trend over 300 or over 3,000. A daily move for gold right now is around 3,000 pips. So that would be the plan for swing traders. Would have positional and trend traders would have profited here and then waited for price to come down here to get into a long trade. If you're a trend trader, then this is your profit point on the trend trade, and then you would be getting long here to resume the trend, the daily trend, monthly uptrend. So that would just be a 1 day retracement. It may retrace further, but price action will tell you whether this is going to retrace further or not. But this is looks as an area of great support. And if you scroll out on the chart, we are in a major uptrend. This would be a great area of support. This is a great area of support. So position and trend traders would be looking to go long here to get in with the trend, and then swing traders would be looking to go long, holding up to the 50 to 70 area again, because this is just a retracement, a breakout retracement. Support becomes resistance, resistance becomes support. So now this is support. And then your intraday trades on the 3-5-15. 3-5-15, you have at the 1600 hour, you have a trade entry here, a trade entry here, trade entry here. So you would be entering here on the intraday trade, entering here with your stop losses placed right outside of your entry. Safe trade. And those are your trade signals for the day of Thursday, January 5th. All right, prosperous trading in 2023 to financial freedom, profitable traders, and be blessed. See you in the next video.